Hey, financial freedom seekers, Simon Dixon here, and this is a very sad subject for me. One of the really sad parts about being involved in financial innovation since I first got involved when peer-to-peer lending launched in 2006, and then I wrote the book Bank to the Future, Protect Your Future Before Governments Go Bust on the 7 disruptive technologies that would change the financial system forever. I find the one of when it all goes wrong the most saddest to me. It's sad for 2 reasons, because the investors that invested in the financial innovation end up losing all their money, and those that tried to create it, often with good intent from the beginning, end up with catastrophic consequences for them, their family and their loved ones. And it's just a sad lose-lose all round. But I've seen it several times being involved in this industry since before fintech was even a word. So the latest headline is that Kwon, for those of you that don't know who Kwon is, he's the founder of a financial technology called Terra and Luna, which was essentially a cryptocurrency that backed a stable coin. For those of you that don't know what stable coins are, they started in 2014 when we were talking about this concept called color coins, which is building technology on top of Bitcoin, where you could have assets that represent different value other than Bitcoin. One of the first one to get traction was a stable coin called Tether, whereby every tether or token in issuance was built on top of Bitcoin, and it could be sent as easy as sending Bitcoin through a technology that was created originally it was called Mastercoin. It was funded by one of the first ICOs, and then it rebranded to be called Omni, and it was built on top of Bitcoin. It was like a programmable language on top of Bitcoin. But essentially, if you had 10,000 tethers, that represented originally $10,000 in a bank. Over time, as it became multi-billion dollars, it was cash and cash equivalents, and it's had several, had to recover. And one of the recovery plans that we were involved in, I think in 2019, if memory serves me right, was an $850 million hole due to government seizures of $850 million that was meant to be held at a bank account. And that bank got involved in criminal activities that's still alleged, that is still being looked at right now, and therefore there was an $850 million hole, and it required a recovery plan in order to execute that. So that was one of the 2019 recovery plans that we were a part of trying to help with. But anyway, this stable coin was created, and the lesson here is that stablecoin backed by dollars are important, because if for any reason the token is no longer pegged at $1 or doesn't trade at $1, you should be able to get the dollars out, as opposed to when it depegs, losing value and it losing its peg. Well, Terra Luna created a very fast growing stablecoin, and it was, rather than being backed by dollars, it was backed by crypto assets, which are highly volatile. And the idea was that there's meant to be an algorithm. I won't go deep into the geeky because it's just not that important. You can look that up. But essentially, it was backed by a very volatile coin where the supply is burnt or created based upon the growth of the network. Well, the peg was lost, and it essentially told everyone that it was decentralized. But it was actually backed almost like a central bank, where Kwon was controlling the monetary policy that backed it, started buying Bitcoin and various assets. And as we started to get increases in interest rates and we went through the 4 to 5 year Bitcoin cycle, what you typically get in a 4 to 5 year Bitcoin cycle is you get a massive correction by about 85%. Followed by a large regulatory crackdown around everyone that built the technology on top of it. And then you go into a halving cycle, which tends to lead to the next bull market and new all-time highs because the supply is fixed, and most of the Bitcoins have now been mined already, so we're quite far down the cycle of the supply. So you've had this 4 to 5 year cycle. I've always said you're a Bitcoin thinker if you've survived a 4 to 5 year cycle, and each month you continue to end up with more Bitcoin than the previous month. So that's my challenge to everybody. Put together a 4 to 5 year plan where you have a reasonable strategy for accumulating or ending up with more Bitcoin each month for 4 to 5 years. By the end of it, you'll be cured of the disease called fiat thinking, and you'll be in hard money thinking. You could do it with gold if you prefer, if you're more conservative, but if you believe in the future of digital hard sound money, then that's how you know you're a Bitcoin thinker, if you survive such a thing. And lots of videos have been created on that. Anyway, back to the original point. So this algorithmic stablecoin was basically backed by the fund, as it were, and the investment decisions of Kwon. And so therefore the Korean regulators consider it a investment contract, and an investment contract is a security, and a security has to comply with securities laws. People get confused thinking that securities are just debt or equity. There's all sorts of investment contracts, derivatives, agreements to invest based upon the management and control of others by investing your money with an expectation of returns. There's lots of different definitions globally. And so as a result, very sadly, for those that have lost money, this may be good news, but for me it's just a lose-lose all round when somebody that tried to create the technology didn't understand the nuances of compliance and regulations, or got bad advice, and ended up creating innovation. It led to the destruction of approximately $50 billion of money, which also had a catastrophic effect on those that were invested in that. It had a domino effect. So one of the companies was 3 Arrows Capital that was invested in it. Another one was publicly traded company Genesis, this on the Canadian Stock Exchange. And then that led to them pulling out a deal to invest in a custodian called BitGo for $1 billion in speculation. 3 Arrows Capital, many different crypto lending firms had lent money to 3 Arrows Capital. This led to liquidity issues in the crypto lending market, therefore it had a catastrophic effect, beyond the 50 billion that was destroyed as a result of this decision. And so obviously that leads to a regulatory crackdown. Now, here's the education here. Having been involved in securities laws from the beginning of the financial innovation movement, many people think that if regulators don't enforce, then you don't necessarily need to comply with those securities laws. But because at Bank to the Future, we were the longest standing company in Bitcoin. So we've been around since a year after Bitcoin launched, since we launched the vision when I presented it at the first Bitcoin conference. Also the longest standing and first regulated crypto securities business. And so what we had to do was, rather than ignore the laws, because many people had tried to do stuff on top of Bitcoin. For example, Eric Voorhees launched a funding of Satoshi Dice through Bitcoin, believing that if it was money, it was exempt from regulations, and that led to an unregistered security claim. And then many people did it after that. And then we had the ICO boom. And then every 4 years, we tend to repeat the cycle where those that are new to it, they do something they haven't learned from the past. They launch things, and then other people copy it and say, well, if they're doing it, I can do it. And then they stretch it a little bit further until we end up with something like Terra, where it's essentially an unregistered collective investment scheme and hedge fund based upon the investment decisions but they put a decentralized tag on top of it, and therefore people just keep stretching the barrier further and further. And then they create funds, and then they create crypto lending platforms, and then they just do everything on top without considering, and it just gets further and further and further. That always leads to the big crash, the 85% correction. I've been through all of the cycles in Bitcoin, as I said. So there are securities laws, and all around the world. So almost every single country. I haven't come across a country that I can think of that doesn't have securities laws or uses somebody else's securities laws. So these securities laws are very well defined in every single country. So complying with them globally is a big challenge. It's something we had to overcome at Bank to the Future. We did it in a few ways. So firstly, when we originally wanted to launch, we were in the UK, and we spent 3 years. We created the UK Crowdfunding Association and the UK Digital Currency Association. I was a founding director of both, and we had to lobby regulators for regulatory reform. At the end of 3 years, the UK created the equity crowdfunding market, which was the foundation, and other countries saw what we did in the UK, and then President Obama spent about 4 to 5 years creating the Jobs Act, which changed the 1933 Securities Act to be more inclusive. We were involved in that for a long time in order to get reforms to securities laws in the US. That led to legislative changes where companies could apply in order to raise finance. It was more inclusive, it was smaller, it was digital, and then other countries around the world started to see those reforms. At this time, the ICO market came along, ignored all those regulations, and then we ended up with the 2018 bear market as a result of the regulatory crackdown. Then more decentralized governance tokens, DeFi, came along, and then they just keep stretching the barrier, and we repeat the cycle exactly again. So I presented a slide at the peak of the bull market sharing how there would be a big yield and DeFi crackdown, but this time it's probably the last regulatory cycle where all of the tokens, all of the DeFi and yield will go in two directions. Either they're genuinely decentralized like Bitcoin, where you can't shut it down, and there's no pre-mine or there's no reward for people, and it's a genuine distribution. It's not used as a mechanism to raise finance, and therefore you have a DeFi, or the centralized companies recognize that they have to comply with securities laws. And so we have been building all the technology to try and support that, because I believe that the next bull market, whether it's 23 or 24, leading into the halving cycle, will be a securities boom market with lots of innovation in how you do on-chain compliance, as well as centralized companies getting more and more like companies that have to have regulations through either custom regulations or shoehorning it into the existing regulations. So all of that is what we will see, and that's what I've been trying to prepare the market for. But it's very, very sad for me when everybody loses, and this is one of those cases that is inevitable in financial innovation, where loads of people lose money, and the people that created the financial innovation in the first place ending up destroying their lives, their families' lives, and the ones that they love. And it's just lose-lose all round. So the key lessons here is, firstly, diversification, as I've always talked about. At Bank to the Future, we created a platform where people could invest in over 10 to 20 companies rather than one, because you expect one or two to blow up. Also not relying upon one mechanism and diversifying across different ways, as I've always covered on retirementplanb.com. But just recognizing that there is a real tightrope to walk between financial innovation and compliance. And as an industry and as a sector, we have to get that right. Sometimes when you go a little bit off in the wrong direction, you end up with some kind of fine enforcement. And if you go too far in the other direction, you end up with something that just can't be done. And so in order to stretch the barrier and move financial innovation further in a time where it's so important, you have to walk that tightrope, and we have to get these things right. And so, as I said, we have to play within the confines of the law if we want to have the impact that we're going to have. Now that money you can own, money you can spend, and money that has a fixed supply like Bitcoin exists. Another thing that's quite sad to me is where we're seeing Ethereum go right now. It created a proof of work mechanism to make it decentralized. It was the second largest. It wasn't quite the same as Bitcoin because it did have a pre-mine and it was created from a foundation as an ICO without the decentralized distribution in the beginning. But regulators had already said it's sufficiently decentralized, or the largest one anyway, representatives from the SEC, to consider it not a security. But now it's switched to proof of stake. Everybody's taking their ether, they're putting it on exchanges, and these exchanges are getting more and more aggressively regulated. I know that as a shareholder in many of them. And so therefore those that own the stakes control the network, and essentially Ethereum looks like it's going to be owned by the exchanges, which is regulatory capture. So I hope that trend is reverses and everybody starts staking on their own, and there's a successful alternative to proof of work. But the reason proof of work existed and it's so hard is because it's virtually impossible to create an amazing proof of work network. It's something that I believe doesn't get created twice. Ethereum did a version of it, and then they took away the key asset and switched to proof of stake. I believe the reason that they did that, there's lots of other proof of stake changes, so the innovation could have gone there, was really because of thinking about it more like a financial instrument rather than the utility of allowing people to build all these different types of decentralized applications on top of it. So anyway, we'll see where that goes. That's the reality of the situation today, is that you have it in two different directions. The only proof of work chain that we have left now that's genuinely decentralized is Bitcoin, which is why it's so important to protect, so important for the future of digital hard sound money. And then we get all of this innovation that's happening that either needs to get more decentralized in order to survive, or if it's going down the centralized route, we have to comply with the existing regulations and do what essentially I've been doing for the last decade, which is lobby to reform the regulations in order to make them more fit for purpose for the technology that exists today. Because in the future, I do believe, forward out a few decades from now, regulators are just code and a few people ensuring that the code is working correctly. Because all of these rules can be put into code eventually. And then we can move back to, rather than financial institutions doing law enforcement, you have these, like with Bitcoin, for example, you have a blockchain that publishes all transactions. And then rather having a financial institution in the middle that censors your money, stops your money, like an exchange will have to do as more and more laws get implemented, and it just goes within the existing laws as well. Then if you have the decentralized network, you have law enforcement doing the job and a transparent blockchain, so that if you're committing crime on the blockchain, you've created an immutable record and law enforcement can do their job. Rather than having financial institutions as outsourced law enforcement officers and police officers, which leads to people ruins the user experience of money, people not being able to own it, people not being able to spend it without censorship, and just a financial system where the whole world is guilty until proven innocent, and you're treated like a criminal every time you transact over $10,000, for example. And the cost for running these financial institutions just gets bigger and bigger and bigger. Anyway, reform rather than lack of compliance is the strategy that I believe we need to follow as an industry, and then really push the barriers of decentralization in order to have a regulator of the regulator, because after all, Regulators are corruptible as well. Absolute power corrupts absolutely. And so therefore you need a force. For example, with central bank digital currencies, the regulator of them will be Bitcoin, because if you make it to where people lose too much privacy and too much freedom, and you connect it to the passport and a social credit system and automated tax collection and automated negative interest rates so that people spend it at a faster velocity. As you add more modern monetary theory and transition to communism on a blockchain, as opposed to freedom on a blockchain, which is Bitcoin, then you have competition between countries that are supporting Bitcoin and decentralized. And those are very, very important forces to maintain as we move to a central bank digital currency, deleveraging, debt bailout that I've been predicting since I first covered this subject in 2016. And in my book, Bank to the Future, I didn't call it central bank digital currencies, but I was sharing how modern monetary theory and government issued currencies and central bank issued currencies are inevitable, predictable, and guaranteed because of the debt-based Ponzi scheme of creating them through banks. Anyway, sorry I've put a lot more on there. The subject of the video is that Kwon, Interpol has put out a red alert there, and inevitably people's wealth, money, a lot of money has been destroyed. It created a cascading effect, and it led to the 4 to 5 year cycle. So what are the messages that we can do here? As I said, the time to learn about how to put together, if you're affected by it, a personal recovery plan. Check out my video on how to recover from financial disaster. Every individual, whether you're wealthy or this has been a destroying moment for you, put together a recovery plan. We go through these cycles of, obviously I can't fully predict the future, and the past does not equal the future, but here's what the cycles have always looked like. You end up with an innovation cycle boom, an 85%, up to an 85% correction when the innovation goes wrong and you get a regulatory crackdown. Then it moves into the halving cycle where the fundamentals and economics of Bitcoin prevail, and then the innovation goes with it. And in each cycle we get a divergence into deeper DeFi and real decentralization. So I think the next one you'll see a lot of DeFi built on top of Bitcoin because the proof of works network can't be shut down. Then you end up with better regulations for the centralized companies. And centralized is always the onboarding, and then eventually if you're managing your finances and you're learning and innovation correctly, you get that right mix between protecting yourself from going wrong in the decentralized world with also some of the protections that come in the centralized world, and just getting that balance right. Everything we talked about at retirement plan B anyway. So make sure you do a personal recovery. If your company's affected, do a company recovery. And next year, I think we're going to be working on country recoveries now that Bitcoin's legal tender in certain countries as well. So I'll be documenting and sharing that journey all the way. But always remember, you are alive at one of the most interesting and exciting times in financial history. Some are going to get hurt, others are going to do really well. And I want you to be on the right side of that change. Thank you. Peace.